What happened in the market today was one of the strangest things you'll ever see. It has happened before, and we'll get into that because there is precedence for this. But NVIDIA beat revenue, beat earnings. I don't think the bearest of bears thought that NVIDIA would miss earnings or revenue, right? They also gave proper guidance. They gave a guidance that was better than expected. Overnight, markets were gapping up. And then the very next day, which was today as of the time of this recording, November 20th, market gapped up by 1.5%, closed down 1.5% with this brutal bearish engulfing candle. I'm obviously getting a lot of questions about what does this mean? Is this the bottom? I'll get into all that for you. NASDAQ closed down by over 2%. Now, I want you to take a look at the volume here. This volume is very significant. If you take a look at this volume here and you see red volume on these huge down days when we have record-breaking volume, what does that typically look like to you? This type of capitulation volume typically happens at bottoms. Now, the last time that the market gapped up by 1.5% and dropped by 1.5% was April 8th of 2025. The next day, the S&P 500 closed up 10.5%. Both of those days were historic for different reasons, just as this day was here. NVIDIA gapped up, ended up closing the day down 3%. Now, for those of you that are familiar with NVIDIA, this is actually not out of line for NVIDIA. It does this quite a bit, even when beating earnings and revenue. So in this video, I will give proper context to what happened today, and we'll try to break it down and see whether we can find some clues about what is going to happen for the rest of the year and how we can leverage this, because some stocks are definitely getting close to buy the dip territory. That is the good news about this, that quite a few stocks right now are starting to get into attractive territory. So I will get into that. Let's just get right into it. So as I said, the market gapped up 1.5%, closed down 1.5% with above average volume. This was actually the most volume going back since October 10th, and before that was in August when we had an interim bottom, and before that was in April when we had a bottom. And if you take a look at this, you'll see that this typically happens during market bottoms where you have a capitulation type of sell-off. Now, I know this is anecdotal, but when NVIDIA was up overnight, a lot of people were messaging me, and I saw the sentiment on X, like, could it really be that easy? Could you just buy NVIDIA before earnings and that's it? That's the market bottom and now we're saved. Well, obviously the market had other plans, and no, it is not always that easy. But this is very typical for NVIDIA. I mean, just take a random date, May 28th, beat revenue, beat earnings, was up 3%. The next day went down 3%. You go back to August, intraday, we were up and then ended up down 1%. The next day down 3%, the next day down 2%. And we didn't really bottom out until a few days after earnings, and then we started rallying. You could pick any random time. Go back to November 2024. You could see that after NVIDIA beat revenue and earnings, the next day, we spiked up, and then we followed that with -3%, -4%, and it wasn't until a few days later that we started rallying again. So NVIDIA on its own, that's not a surprise to me. And as a matter of fact, that's why I said on, obviously in the Discord, but also on X, I said, do not buy NVIDIA calls. Here you go. If you're bullish on NVIDIA earnings, I would not buy calls. By the way, follow me on X for more free trading and finance content. Also Instagram. So that's NVIDIA. I don't think there's really any explanation here. 57 billion in revenues, plus 62% year over year, 1.3 EPS, 60% year over year gain, $51.2 billion data center revenue, up 66% year over year. The guidance for Q4, much better than expected. So 63.7 to 66.3 billion. And it against 61.98 estimated, 73.4% gross margins. I mean, it was just a massive beat all across the board. Jensen said that Blackwell sales are off the charts. Cloud GPUs are sold out. I mean, who expected any different? But this is why I've been telling you guys the last few videos, this is not a swing-friendly environment. Back after Liberation Day, you can see that we were bouncing off the 21 EMA routinely. This is a sign that we are in a very strong trend. Now, once we break that and you see that the market is very comfortable sitting at larger moving averages, the 50-day, now the 100-day, momentum is dying. It doesn't mean that the bubble burst, but as Ray Dalio put it, bubbles sometimes get poked. And in this case, this was a little poke in the bubble, and clearly it was, because we're at the 100-day moving average for the first time since after Liberation Day. And officially, this puts us down 5% from all-time highs. So this is an official pullback, not a correction. To some of you, it may feel like a correction because of what you're holding. So if you're holding a lot of high beta stocks, it feels like crap. If you're holding some of the higher quality stocks, it might not feel that bad. It sucks, obviously, but it's not like you're down 60, 70% in your portfolio. And even though Nvidia beat earnings, remember what I told you in my last few videos. I said that the market hates uncertainty. Right now, we are dealing with a wave of uncertainty. Nvidia earnings will make that better. And as I showed you, it does take a few days for Nvidia's earnings to smooth out. I'm not even worried about Nvidia. But the market is still dealing in uncertainty, just as the BLS officially canceled the October jobs report. To make matters worse, we got the unemployment rate for September today, as of the time of this recording. The unemployment rate is 4.4%. If you take a look historically, that is the worst unemployment. You're going to have to go back to November of 2021. Right after the pandemic, that was the last time we recorded an unemployment rate this bad. So unemployment, and we're looking at old numbers, right? Like we are looking at September numbers right now. If unemployment was bad in September, what do you think it's going to be in October or November? So right now we are dealing with a wave of uncertainty. We do not have up-to-date data. They just canceled October's data, and we're not going to get November's data for another couple of weeks, which means that the odds of a Fed cut are now dwindled to 39%. Just a month ago, friends, just a month ago, this was up to 99% chance that the Fed would cut is now 39%. So the market hates uncertainty. And Nvidia did give us a little bit of uncertainty with regards to AI demand. But in terms of the economic picture, what the Fed is going to do in terms of interest rates, in terms of easy money versus tightened money, we just don't know. And the market is not going to feel comfortable until we know. Now, the way that I navigate the markets, I'm a huge believer in knowing upfront what are the plausibilities, because people get anxious, and there's a lot of anxiety, a lot of anger, and a lot of frustration when the market is doing things that you didn't expect, or when you or your portfolio are not set up in a proper way for what could potentially come. Okay. I do think that these conditions here that I talked about, where based on the volume, based on the intraday reversal, I think that these are conditions for getting potential big bounces. But in the overall picture, I think that going into next year, until we have more certainty around the data, I think that the S&P 500 has a very plausible chance of falling to the previous high of 2025. So if you look here, there is a weekly fair value gap here. This was the previous high from February of 2025. We have now made a series of higher highs and higher lows here. And one other thing that I back tested is when we hit the 100-day moving average during the winter time, that typically leads to a further sell-off shortly thereafter. So I don't think that this is going to dive immediately down to the 200 MA. Like I said, I do think that we could get a big bounce here in the short term, especially based on that volume phenomenon that I was telling you about, but also because the NASDAQ took October's low, the S&P 500 didn't take October's low. That kind of divergence along with that volume phenomenon can lead to a pretty big bounce here. If you take a look at the S&P 500, last year, for instance, during the wintertime, something very similar, by the way. You have a very strong trend. It starts to cool off, a bearish engulfing candle. We hit the 100-day moving average. We get back to all-time high, consolidate some more, and then in February is when we started dropping, and we eventually hit the 200-day moving average and more. So I do see something potentially similar happening here, and you want this to happen, guys. All of you guys who complain about we never get dips or the dips get bought up or whatever. I mean, think about it. If we hit the 200-day moving average, all of your favorite stocks will be on sale. And there are some really good sales now. But this is what you want to happen in order to for the market to keep going. NVIDIA earnings, as a canary in the coal mine, did show that the demand for AI was still very robust, that guidance was going nowhere. But a sell the news effect coupled with data uncertainty, especially uncertainty around Fed policy, is ripe for a pullback to a correction, especially when the market has been continuously priced for perfection and now things are not perfect. But remember, we are getting rate cuts next year. We are getting a new Fed chair. Also, the Trump tax cuts don't go into effect until January, and those tax cuts are going to be very stimulative, in my opinion. No tax on tips. We're going to get a whole bunch of subsidies as it relates to buying cars, buying houses. People are going to have more money in their pocket next year. And the Fed is likely going to start quantitative easing. But until that happens, this pullback does make a whole lot of sense to me, even though the character of this pullback in one day was pretty brutal. But go back and watch my last 4 or 5 videos. This is why I said I do not favor swings in this environment. And I still don't favor swings in this environment. This is a very different environment to being able to buy at the 21-day EMA and just continue to ride that momentum. Now, I will be updating you guys and doing more videos, and obviously in the Discord is where all of my real-time alerts will be. But there are some things that I am excited to get back into. You guys know I talked about SOXL when it was down in the single digits. We bought this at $7, sold it near 40. It is now trading at 31. I am looking to get back into SOXL at some point. I am intently looking at Uber here. Uber is a cash generating machine. In my opinion, unfairly down 9% this week, but the broader market is down anyway. You could see this trend line here since 2022. So I am looking at Uber in the low 80s, high 70s. Netflix split and is down 5% this week post-split. Getting very close to my buy range in the low hundreds. Would love to see if it can fall to the 90s, but this one is definitely on my list. Meta, out of the entire market, was only down 0.2% today, but that's because Meta was already beat up coming into today. Still on my list. As I wrote in the Discord, it has a 23 PE, price to FCF ratio of 28, which are both the lowest in recent history for Meta. Free cash flow yield of 3.56%, which is the highest in its history. Highest ever profit margin, highest ever return on invested capital, highest ever operating margin, highest ever operating cash flow, highest ever net income. Microsoft is a stock that I do not own, but definitely looking at which levels look attractive for me on Microsoft. So this one is on watch as well. I'm waiting on Costco to get to my level below these equal lows of 860, but Costco is another one that I'm looking to buy, and it's definitely a diversification point away from technology. Robinhood right now is down 31% from highs, so I'm eyeing this one very closely because I think that there could be a massive opportunity for the long term on Robinhood. And I would love to see AMD fill this gap here, which was the announcement of the OpenAI partnership. We'll definitely be looking at that intently if we start getting there. And Bitcoin definitely needs to hold it here. It needs to hold this golden pocket at this fair value guide. But you can also look at Bitcoin, by the way, to project market moves. So when Bitcoin is weak, like super weak, and the market is very strong like it was today, you could use Bitcoin as a confluence indicator to potentially dictate or potentially project what the market is going to do, because Bitcoin is the ultimate risk on asset, but it definitely needs to hold here. If it does not hold here, then I think that Bitcoin is plausibly going back down to the 60s. It definitely needs to hold this level here. So like I said, I do think that we get a relief bounce here just based on the characteristics of that volume, this being a capitulation sell. December 10th, when the Fed does give its FOMC meeting, and it will be doing so pretty much blind, that is definitely an event to pay attention to, because in my opinion, that will determine whether we get a rally for the rest of the year going into next year, or whether the market shits the bed completely before the year end. Also, keep in mind how we close here on SPY, because in recent history, we haven't had a 5% close, minus 5% close on SPY that then didn't have a follow through for at least one other month, meaning there wasn't a standalone minus 5% month and then we rallied thereafter. Anytime we hit that minus 5% threshold and closed, we then had follow through in the coming months. And I'm going back, and I actually can't see precedents for this going all the way back to 2000, and you would have to go back to 1998, the last time that we had at least a minus 5% month, where the next month was then green. So we are now down 4.33%, and there's a few trading days left. If this month ends minus 5%, then I think that 200-day moving average will come sooner rather than later. But the point is here, guys, you have to be prepared for what's plausible. This is a very plausible level here. This 200-day moving average, the monthly fair value gap, the previous high, the previous all-time high, between 610 and 615 is a very plausible level. Is your portfolio set up to withstand that? Now, I'm not talking about your long-term portfolio full of quality stocks that you never plan on selling for 20, 30 years. I mean, your swings. Do you have a lot of swings open, which you shouldn't if you've been watching our channel? Do you have a lot of shit stocks, not enough quality stocks? Well, this may be your opportunity to stage a rotation. Be intentional. Write down what you're going to do, what you're going to rotate out of, and what you're going to rotate into. This weekend, we are doing our November investing call as well in the group. So if you want all of my real-time buys, all of my real-time analysis, you want to join the investing call as well. You want to trade live with me every single morning. Start your journey for 2026 off right. Do not let another year pass by where you are just clueless and you are trading alone and you have no idea what you're doing. Link is in the description below, wap.com/thetravelingtrader. Come and join us. Let me know what you think below. Is this just a shakeout? Is this the start of something worse? How are you positioned? Are you in any swings? Did you limit your swings because of the environment that we're in? What are you excited to buy? I will be updating you guys and trying to do more videos during this tough time. But like I said, if you want access to all of my up-to-date buys, make sure you join us. Do not try to stage your entire portfolio off of delayed videos. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.